Welcome back to Crypto Shockwave, the channel where we break down the biggest stories in the XRP world and give you the analysis that actually matters for your portfolio. 8 assets. That is how many digital assets the Chicago Mercantile Exchange and Nasdaq just decided represent the entire future of institutional finance. 8 out of thousands of digital assets in existence. The CME Group, the world's largest regulated derivatives marketplace, partnered with Nasdaq and launched a brand new futures contract on June the 9th, a single regulated product covering the entire digital asset market. And when they sat down to decide which 8 assets deserved a seat at that table, they picked Bitcoin, Ethereum, Solana, Cardano, Chainlink, Stellar Lumens, Bitcoin Cash, and XRP. XRP is now sitting at the same regulated institutional table as Bitcoin and Ethereum on the CME, on Nasdaq, in a cash-settled futures contract that every major financial institution in the world can access today. And XRP's price right now is $1.10. $1.10. While CME and Nasdaq just told Wall Street that XRP belongs in the same product as Bitcoin. That contradiction is what this entire video is about. Stay with me. So let us start with what CME and Nasdaq actually built, because most people are reading the headline and missing the significance completely. The CME Group is not a startup. It is not a digital asset company. It is the institution that has run the world's most important regulated derivatives marketplace for over a century. Every major commodity, every major currency, every major interest rate product on Earth has a futures contract on the CME. And on June the 9th, CME partnered with Nasdaq to launch the Nasdaq CME Crypto Index Futures, a market cap-weighted basket contract covering 8 of the largest digital assets by market capitalization and trading volume, cash-settled, regulated, available to every institutional investor that already uses CME products today. Giovanni Vizioso, global head of cryptocurrency products at CME Group, said this in the official launch statement. He said the new contracts offer investors a regulated way to gain broad exposure to leading digital assets, while retaining the capital efficiencies and transparency of a regulated futures marketplace. That is not marketing language. That is CME Group telling its institutional clients that digital assets are now a permanent part of the regulated financial system. And XRP is one of only 8 assets they chose to represent that system. But wait, because here is what the mainstream coverage of this story completely missed, and this is the detail that changes everything. Every previous CME digital asset product was single asset, Bitcoin futures, Ethereum futures, single coins, one at a time. The Nasdaq CME Crypto Index Futures is the first time CME has ever built a market cap weighted basket product covering multiple digital assets simultaneously. The first time in CME history. And out of every digital asset that exists today, XRP was selected for that historic first basket. Not because of speculation, not because of price momentum, because XRP met CME's institutional liquidity and market cap standards. Standards that eliminated thousands of other digital assets from consideration. The train does not wait. And on June the 9th, XRP got on the train, while the price was sitting at $1.10. Now let me give you the number that puts this in full perspective, because this is where the story gets extraordinary. The CME currently handles over 1 billion contracts per day across all its products. 1 billion. Every pension fund, every hedge fund, every sovereign wealth fund on Earth uses CME products to manage risk and gain exposure. And now, for the first time in CME history, those same institutions can access XRP in the same product as Bitcoin. Same account, same capital, same regulated CME contract. No new accounts, no new custodians, no new compliance approvals. One regulated CME contract, 8 assets including XRP, available today. And here is the context that makes this even more significant. XRP ETFs have already pulled in $1.39 billion since their November 2025 launch. That was retail and early institutional money. The CME futures opened the door to an entirely different category of institutional capital: pension funds, endowments, sovereign wealth funds, capital that cannot touch unregulated products, but can touch CME futures on day one. Stop right there, because I need to show you the single most important contradiction in the entire XRP market right now. On June the 9th, the same day CME and Nasdaq launched this historic futures product, XRP ETFs recorded $7.44 million in net inflows in a single day. On the same day, the price was sitting at $1.10. On the same day, retail traders were panicking. On the same day, bears were calling for $1. Institutions were sending $7.44 million into XRP exposure, and CME was opening the door for the largest pools of capital on Earth to do the same. Now let me show you what this means for the Clarity Act. The Clarity Act Senate floor vote window is open right now, June the 15th to June the 18th, 4 days. And here's why the CME launch makes the Clarity Act vote more powerful than it was last week. The Clarity Act would formally classify XRP as a digital commodity under federal law. CME already treats it as one. CME already included it in a regulated commodity futures product. When the Senate votes to confirm what CME already decided, that price gap closes. And it closes fast. But wait, because there is a second layer to this story that nobody is connecting. On the same day CME launched this product, June the 9th, SBI Shinsei Bank in Japan announced an XRP interest program, letting customers earn yield directly on their XRP holdings, a regulated Japanese bank, paying interest on XRP. On the same day, CME added XRP to its institutional futures basket. On the same day, XRP ETFs pulled in $7.44 million. 3 separate institutional signals, same 24 hours. While the price sat at $1.10. Smart money buys in the dark, while retail sells in headlines. And on June the 9th, the dark was very busy indeed. Now let us be completely honest, because I always show you both sides. The bear case is real, and it deserves serious respect. XRP is down 38% year to date. Every major moving average is pointing down. The 20-day, the 50-day, the 100-day, the 200-day, all pointing down. Analysts at Glassnode have flagged an alarming shift in XRP holder behavior. Long-term holders are showing lost selling patterns not seen since 2022. A confirmed weekly close below $1.10 opens downside toward 90 cents, and below that, 80 cents. Polymarket prices Clarity Act passage at 55%. Kalshi prices pre-August recess approval at just 37%. CME including XRP in a futures basket does not guarantee the price goes up tomorrow. And the chart is not giving bulls any reason for confidence right now. But here's the reframe. CME does not include assets in regulated futures products as a favor. Nasdaq does not put its name on products that lack institutional legitimacy. When the world's largest derivatives marketplace tells pension funds and sovereign wealth funds that XRP belongs in the same regulated product as Bitcoin, they are making a statement about long-term institutional value, not about where the price closes tomorrow. Price is what you pay. Value is what you get. And on June the 9th, CME and Nasdaq told the world exactly what they think XRP's value is. So what are the 3 signals you must watch in the next 4 days? Signal 1. Watch CME Nasdaq XRP Index futures volume in the first week of trading. If institutional volume builds consistently in the first 7 days, capital is already rotating in. The door is not just open, money is walking through it. If volume is thin in week 1, institutions are waiting for the Clarity Act vote before committing. Either way, the infrastructure is built. Signal 2. Watch the Clarity Act Senate floor vote announcement from Majority Leader John Thune. The CME launch means a Clarity Act passage now has immediate infrastructure behind it. The moment a floor vote date is confirmed in the June 15th window, CME futures volume and XRP spot price will both move before the vote result, before most retail traders even understand what is happening. Signal 3. Watch the $1.10 level on a daily close basis. This is the line that separates the current bear scenario from the CME validation scenario. A daily close above $1.10 with any volume recovery means the institutional bid from CME launch day is holding. A daily close below $1.10 on heavy volume means the macro pressure is still winning, and the CME launch will need the Clarity Act to unlock its full price impact. Let me bring this home for you now. 8 assets chosen by CME and Nasdaq to represent the future of institutional digital asset finance. Bitcoin, Ethereum, and XRP in the same regulated futures contract, available to every pension fund and sovereign wealth fund on Earth. Launched on June the 9th, while XRP sat at $1.10. 7.44 million in ETF inflows on the same day. SBI Shinsei Bank paying interest on XRP on the same day. $1.39 billion in cumulative ETF inflows since November, and the Clarity Act vote window open right now. CME did not include XRP to be kind. Nasdaq did not put its name on this product by accident, and the gap between $1.10 and what CME just validated is either the biggest opportunity of this cycle or the most expensive mistake the institutions just made. The Senate has 4 days to help answer that question. If this video gave you the clarity you needed, hit that like button right now, and share this with one XRP holder who is staring at the price chart and missing everything that happened on June the 9th. Because they need to see what CME and Nasdaq just did before they make any decision. If you are not subscribed yet, hit that subscribe button right now. Turn on notifications, because the next video we are dropping could be the most important one you ever watch. Stay wise, stay positioned. I will see you in the next one.